Welcome to TradeGlo. Most people use scalping for intraday trading, but many don't know how to actually trade intraday in a way that keeps losses minimal. Today, we're going to share a strategy that has excellent accuracy, especially for intraday. It's the same strategy we personally use. In intraday trading, we square off our position the same day. Whether in profit or loss, we must exit by day's end. That's why it's important to enter trades that have momentum. If by chance the trade we take leads into a sideways market, we'll likely end up with no profits. So our first focus is to find momentum-based trades. But how do we know whether a particular day will bring momentum or be sideways? Don't worry, we'll cover that too in this video. For intraday trading, the time frame we choose is very important. Suppose we take a trade on the 1-hour chart. Even if our analysis is perfect and the market moves in our direction, if it happens the next day, we don't make profit. So the best method is using a bottom-to-top approach. Some call it top-to-bottom, but both refer to the same idea. Most traders don't use bottom-to-top analysis, but we strongly recommend it. For intraday, we can use the 15-minute time frame, but only to plan entries and exits. We first go to the 1-hour time frame and mark all key levels: support, resistance, trend lines, demand-supply zones, and major trends. Then we move to the 15-minute chart and look for candlestick or chart pattern setups near those levels. We can even use the 5-minute chart for entries and exits to get a better risk reward. But personally, we prefer 15-minute execution. Now look at this example. On the 1-hour chart, the market is clearly in an uptrend, forming higher highs and higher lows. There's a trend line providing support and a strong resistance zone above. Price had dropped sharply in one candle, so this area may act as support. Near this area, we have a bullish trend line and a support level. If price gives us a bullish signal near this zone, we can enter a buy, but our entry will be on the 15-minute chart. Switching to a smaller time frame, we get this type of setup. But now the question is, will there be momentum or will it go sideways? For this, we use Bollinger Bands. Let's explain quickly. When the upper and lower bands of Bollinger Bands are narrow, it signals a sideways market. When they widen and blast in a direction, it shows momentum in that direction. Applying Bollinger Bands here, we see the bands were very narrow near this level. Then suddenly they expand upwards, suggesting upside momentum is likely. At least now we know it's not a sideways zone anymore. Now we wait for a candlestick confirmation. A doji forms, but the next candle doesn't close above its high, so the doji has no real value. If the next candle gives confirmation, we'll enter buy. Though we see a bullish candle near the trend line and support, still, since there's no confirmation candle, we skip the trade. Next, we get another bullish candle, and this time, the confirmation candle closes above its high. Now we can enter buy. Our profit target will be near the level where price had previously fallen in 1 hour, and the stop loss just below support. As we see, price moves with momentum and the target is achieved. This is how we combine bottom-to-top analysis with Bollinger Bands to plan precise intraday entries and exits. This trade gives us a clean 1-to-2 risk-to-reward ratio. Let's look at another example. In this chart, price is bouncing between a support and resistance zone repeatedly, a classic sideways market. In such conditions, we don't need Bollinger Bands or any other indicator. Momentum won't come here. Some people still try to trade sideways zones, buying near support and selling near resistance. But in intraday trading, this approach doesn't work well. We need momentum. That's why we avoid sideways markets. Next example. Initially, price is trending up in 1-hour chart, forming higher highs and higher lows. Then suddenly the support gets broken. This could be a sign that the uptrend is reversing into a downtrend. We draw a trend line here, which now acts as resistance. The broken support will also act as new resistance. Now pay attention. This is where many traders make losses. As price comes to the trend line, we see a bearish candle followed by a confirmation candle. We enter sell here, place the stop loss slightly above the candle's high, and aim for profit at the nearest support. The market falls and we hit target, getting a big 1-to-3 reward. But look at this. If our stop loss had been too tight, this spike could have hit it, and we'd have missed the whole move. In intraday, stop hunting is very common. It happens in swing trades too, but far more in scalping or intraday. So always give your stop loss a bit of breathing room. Let's see one more trade. Here, price is moving in a sideways range. So we draw a support line touching the recent low and a trend line from the top point. At this moment, we don't know which direction price will move, so we wait. Next, price breaks the support on the downside. Now we wait for a retest, but our entry will be on a 15-minute time frame. Shifting to 15-minute chart, we get a bullish candle, but it's not valid because it's against the trend. It may just push back to the zone, but we won't buy. Later, price comes back to the zone and gives a bearish candle signal. We enter sell, place the stop loss above candle high, and aim for the next support as our target. If hit, we'll get a 1 to 2 risk reward. Price drops again, and we hit the profit target. Even in the 1-hour chart, there was a bearish signal here, but selling from there would have given a poor risk-reward ratio. That's why we do our analysis on the 1-hour chart and execute on the 15-minute time frame. Here again in the 15-minute, the support has broken and is acting as resistance. Price pulls back slightly and moves up, then forms another bearish candle. We can enter sell here with stop loss above and same profit target, again getting 1 to 2 risk to reward, and once again, target gets achieved. Thanks for watching. We hope you found this strategy helpful and learned something new today. If you enjoyed the video, make sure to like, share, and subscribe to TradeGlo for more powerful trading insights.